The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
The first chart that I posted in here was one I wanted to go through because I listened to what Basil was talking about, and that is it's the VIX chart going back 5 or 6 years, and you can see that this is staying down in this area where there's absolutely no fear in the market. Basil hit the nail on the head. Until this fear comes into the market, this market is not going to go down anymore. That's basically the bottom line. It might go up forever. I'm not sure, but we have a lot of things telling us that it is going to go lower, but this might be different this time. There's always, I've been doing this for so many years, and I've heard it so many times, and it's never different this time. This might be the time that it is in fact different. The next chart that I wanted to post in here, by the way, at the half hour, we're going to have Rich Anderson on for Anderson Capital Management to talk about gold and silver and some of the things that are happening in the commodities. But the chart that I posted comes from the International Business Times. It shows every 1,000-point move in the Dow since 1896. So we've covered pretty much 200 years, and 1896, yeah. Well, not that many years. But anyway, going back almost to the beginning of the country. And what I did was I just drew in that 5-wave reverse point pattern that I see happening right now. But it shows how quickly from February of 1995 to 99, we went from 4,000 to 10,000. During that time, my good friend Ralph Akampura was talking about 10,000 Dow. Sometime around 97, I believe, is when he started talking about it, when it was around 6,000 or 7,000, and it got to 10,000, and his boss bought him a 1962 Corvette convertible, just absolute beautiful car with virtually no miles on it, paid $100,000 for it, and of course the license plate said 10,000 Dow. Ralph still has the car. It sits in his garage, but I'm sure that's a memento that he will not get rid of very easily. But we have gone, it's taken us 6 months to go from 15,000 to 16,000, but to go from 14,000 to 15,000, it took 5 years because that was the crash that we had down into 2007 and 2008. Okay, we've got a call in today. This is a good sign from Houston, Texas. Stephen, are you there?
Yes, sir. Larry, how are you doing?
Well, I'm doing really good today, as a matter of fact. What can I do for you, my friend?
All right. There's only 2 bears left, you and me, I guess.
And I'm not so sure about you, Stephen. I'm just teasing you. Go ahead, my friend.
Yeah. My question was, I actually have 2, but one was on copper because I've heard you talk many times that it's kind of a bellwether commodity to our overall economic stability, and it looks extremely negative to me. Now, maybe I'm not seeing things right, but what are your thoughts on copper?
Are you a trend follower?
No, I look at waves, and I look at the way things are positioned. And I see a series of lower highs and kind of a parallel bottom. And generally, when that bottom breaks, it breaks big. Now, I may be wrong on that.
We've been going down for 3.5 years with lower tops. So with market going straight up and copper going straight down, I don't know what they're making out of these products, but they certainly don't seem to be using copper in them anymore.
Nope.
But maybe it's different this time, Stephen. I don't know.
Yeah, I kind of think that it is this to me looks a lot like silver did there for a number, or not silver, gold did for a number of years, where it's kind of moved sideways and then it had its big break. I think this is going to have a break just like that, and I think all the metals are going to go down by that too. I just don't see, and I don't know. Maybe I'm seeing something different than everybody else, but.
Well, if you want to, if you'll stay with me here for just a second, I'm going to put in the silver chart going back the last 6.5 weeks, along with the gold chart. And as you can see, we've been making lower lows in silver now for quite a while, and we're making lower lows now, in the gold market. And so it's telling us that, there's not much demand for gold, silver, and copper right now. And the same thing is happening with platinum and even palladium. So these markets are going down. I mean, every commodity market that I look at, with the exception of something squirrely like orange juice, is going up. Well, the meats go up, but that's only because they feed cheap corn to the cattle to get a good price for meat. So I don't know. Maybe it is different this time. We have very, very. I know the inflation numbers that they give us are all baloney, but we got gasoline under $3 a gallon here in Arizona, and almost all through Texas and Iowa and other places like that too, but not in California or the coast. But gasoline prices have been dropping too. It doesn't sound like something bullish, but that's not what the market's telling us anyway.
Yeah, and Larry, on just a quick note on the stock market too. Do you follow expanding wedges?
Absolutely. That's one of the main reasons I'm so bearish now, is because
these are scary.
These are the most bearish of all the patterns that I have ever seen in all the years that I've been trading, is this reverse point expanding triangle, also known as a T6 that H.M. Gardley talked about. And these patterns, these have the highest probabilities of working. Now, these are so long because they're on weeklies and monthlies.
Right.
This might take, an extra month or two to form. I don't know, but boy, these are very bearish. And not only that, but they're bringing in the public with heavy margin debt. My goodness, if it's different this time, my hat is certainly off to them, and I wish them the best of luck.
Yeah, to me, it's and I've been listening to you guys since about 2000, and I was all for the gold and silver. I'm totally against it right now. At some point in time, I'm going to be back to the long side of it. But, the stock market looks very, very scary to me. To me, I listen to people, I know it's anecdotal, but I listen to people out there talk about the stock market like that's the only place to go, and, don't worry about the interest rates or anything else. And
someone asked me the other day, am I bullish or bearish? And I said, no, I'm scared.
Yeah.
So that's my new position, is scared.
Yeah. Well, and like you said, things can go on a lot longer, and we have money to go the other way. So it's an interesting situation out here, and the complacency is just astounding how complacent.
Well, this is, if you reverse the process, Stephen, and remember what fear was like back in March of 2009, I mean, you couldn't the volume was almost nothing, and you couldn't get anybody to buy anything. I mean, General Electric was selling for $5, and nobody even wanted it,
Right.
And so this is the exact opposite. You have to have, fears to step in and see if it's going to happen this year, but, I don't know. I feel, I have my two daughters that I love dearly, and they follow the markets with me, and and they keep telling me, say, Dad, we've been here with you before, just stick with your guns, and you'll be ready. And I said, yeah, I know that, so
right.
I'm just waiting to see what happens,
All right, Larry, you and I are the only ones left out there, I guess. So.
Well, I'm going to send you a red badge of courage, Stephen. So, actually, we have somebody else tagging along. I hate to say this, but Basil was actually short the Dow. I almost fainted when I heard his program today. I thought for sure maybe he had some teeth pulled and was on some medication, but he actually took that 100 points out of it, which I thought was fantastic. But when he said he was short the Dow, I almost fell off my chair here. But when that guy turns bearish, you better get on board, because he's a pretty sharp dude, and his little things that he looks at are pretty significant, especially when he talks about that VIX index. I have to agree with him on that there's just no fear out there at all, and history tells us that we know what's going to happen, but maybe it'll rewrite it this year.
Well, Larry, thank you so much, and God bless you and your family, okay?
Yes, thank you for calling in, and have a wonderful holiday, too.
You too. Bye-bye.
Okay, thanks for calling in. We're going to have a break here pretty soon. We've still got the Dow up quite a bit, S&P up, NASDAQ up. The day after Thanksgiving, folks, is the single most positive day in the market. 78% of the time, the market will close higher. And if you'll remember, last Thanksgiving, we had a Bradley cycle low at that time, right at a Fibonacci number. The market closed just barely positive that day, the Friday after Thanksgiving. And boy, on Monday, when it opened, all hell broke loose to the upside, and it never looked back. And then the January effect kicked in, and that was another Bradley date, and away it went. And so we'll see what happens. We got a monster Bradley date coming in here on the. It starts on the night of the 22nd, which is the close of the market tomorrow, and it goes through the 23rd, 24th, and the 25th. It's a big cluster of things that you just don't see, very often. So that's something that we have to keep in mind. We're going to have a break here pretty soon, but when we get back from the break, we want to talk about gold and silver.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks, and I posted into Tiger TV the long-term weekly gold chart, and we hit the 61% retrace. Whoa, let's go back a little bit. We hit the 786 retracement today at this 1235 level. The high was the 1235. 80 was the low. We rallied about $10 from that point. So this is really key, folks, because this is the 786 coming off of that low, which was the main Fibonacci low back at 1177. So if gold has a chance, it's dancing on the side of the mountain right now. With it's got a lot of oil, so it's rather slippery out there, but if gold has a chance to turn, this would be the spot where gold would be ready to turn from this level. We mentioned several times before, in fact, on yesterday's report, we talked about the gold-silver index and what it looked like, and of course you can imagine that it has been under an incredible amount of pressure. I'm going to put the weekly chart up because it shows, it shows it pretty nicely on a technical basis that we're far below the 786 and that we are down in this area from where we are. We're also we're making some pretty strong fib support in silver, going back from a very long way back at this 1970 level, but it's still a little bit early. We'll know later in the week, and we'll see what happens. But actually right now gold has hit the number and has began to rally, and we'll see if that's going to be something that is going to keep the market moving. Now if we live in Goldilocks land and Camelot is here, then one of the things that I would look for was I'd look to buy this gold silver index because it's very oversold for one reason. And if gold is going to turn, that would help the index. And silver, if it's going to hold this massive double bottom going back a year ago at the 19 level, then there's a possibility of that. So that would be a very, very low risk opportunity if it happens. But remember, this thing only hit 1235 about an hour ago, so it's still, relatively early in the game for this because it's. It's really not much happening, with it at this particular time. I'll put the silver chart up just so you can see what it's like on the. We've had a pretty good rally So far this today around 25 cents, which isn't much, but it's better than anything, better than nothing. But I wanted to show you, the long-term daily chart. If you'll give me 1 second here, and you'll be able to see that we've gone through the 618 retracement a long time ago, and also we've gone through the 786 retracement. But there's still a possibility because silver, it doesn't trade as much as the gold. It's 1/6 the volatility of the market, and there's probably a lot of reasoning behind the thing. And when you hear these stories about the J.P. Morgan and how they fudged the depository receipts and stuff, I don't believe any of that stuff. What I do believe is it's not fair for J.P. Morgan to pay a $13 billion fine for things that they did wrong, and nobody has any skin in the game, so nobody goes to jail. That's not fair. Somebody robs a 7-Eleven for $40, they go to jail for 20 or 30 years. You steal $13 billion, you pay a fine, and the fine is tax deductible, so we end up paying the damn thing anyway. I mean, it's just not fair, but this is the way the government's working, so what are we going to do? We're going to have to get rid of the officials through the election process. So I'm going to start voting 6 and 7 times at each election until this thing is rectified. Unfortunately, at my age, I don't have that many election days coming on, so we'll have to, wait and see if that is going to if that's going to be the case. We do have we have Rich Anderson coming on soon, but I wanted to talk about, there is one commodity that is still relatively bullish that's held to 786, and that is the wheat futures. Wheat futures are down around the 650 per bushel level. They've had some higher bottoms here from last August. It's been down steadily for quite a while, well over 6 weeks, and now it's finally finding a bottom. So I think we've got a chance here for a little bounce in the wheat market. The corn market looks like it's not doing good. Dow up 100 and S&P up and whatever.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we've got our good friend Rich Anderson on from Anderson Capital Management. Rich, are you there?
Yep.
I want to wish you a happy Thanksgiving from Mark and Paula Douglas.
Oh, great, yeah.
We're going to be spending our usual holiday, the family, with them, and they wanted to give you the salutations. We're renting a balloon, and we're going to take it over the Grand Canyon. We're taking the whole day. We're leaving early in the morning, coming back late at night. Hopefully the balloon will come down in one piece. But we're taking the whole family for a balloon ride, which is going to be hopefully a lot of fun.
Wow,
listen,
that
what
sounds
can I
really
do?
exciting. Take some pictures for me.
Yeah, I will. Hey, listen, tell me what you think about the gold and silver. What's going on? Is just margin liquidation, or what's your feeling here?
I think it's, well, you know, you saw the bonds in the stock market have a little problem yesterday when the Fed Open Market Committee meeting minutes came out where they discussed, well, we can't keep this QE forever. Mm-hmm. And that put pressure on bonds and put pressure on the stock market. But the bottom line is we have people printing money as fast as they can in Japan, in Europe, and in the United States. And it's just a matter of time before people realize that some things are a store of value and are relatively cheap, and gold is one of them. So, yeah, pressure was put on bonds in the stock market yesterday, and by default onto the gold and silver. I frankly am looking at. I'm not a big metals trader, as you know. I'm more of an ag trader, but frankly, looking at that as opportunity. Our good friend Rick, who does a lot of cycle work, had projected that cycles coming into the end of this week should give you an opportunity in those markets.
That's Rick LaRusso, correct? From that's Rick LaRusso, right, Rich?
Right.
Yeah, he's one of the better technicians that we know. He's in our age category. Most of us spent same time under the same parole officer. That's how we knew each other. Rich, tell me why. People ask me this question, and I don't trade the meats that much, but the cattle continue to go up and up. Is this just because they're feeding cheap corn to get the fat cattle, or what's going on there?
Well, it really goes back to we had a drought in the Southwest, Oklahoma, Texas, that lasted a couple of years. and you saw that reflected in the corn prices, right? But what you didn't see reflected was that the pastures, there wasn't any grass. So if I'm a rancher and I run cattle on grass and I don't have any grass, I can't afford to buy the hay for them because the hay, goes up like the price of corn. So I sell off some of my herd. So there's less cows, which produce less calves. So basically, it's a numbers thing. And unlike chickens, where you've got 9-week incubation period, and then you feed them for 3 months, and they're on the table. If you want to expand the cow herd, you now have to hold back some of those heifers that were normally going to market, so that makes less numbers to be killed, right? And then number two, you breed them. It's 9 months gestation period, and now it's 18 to 24 months before they're ready for slaughter. So it's almost a 3-year turnaround if you were going to increase your numbers of cattle, and it's taken a lot of time. Now the other thing that's going on is that some of these additives, some of the packers said you can't use this additive. Well, they've switched to another additive, and frankly, what they're finding out is they've got more choice cattle than they had when they were using the other additive. But the other part of the equation is that we're seeing more beef imports from overseas into the U.S. South America, it's limited because in order to import beef from South America, it has to be cooked to 190 degrees, and therefore it has to be canned, so that's mostly what comes from there. But if they ever reduce those restrictions, they could vary us in supply. So it's a supply thing. It's numbers.
Rich, what do you hear about because I know you do a lot of work in the financial stuff. What do you hear about the fines that we're seeing from Bank of America and also J.P. Morgan, where they're getting these $13 billion fines? I mean, I know you have friends at the SEC and the NFA and stuff. Do you hear anything about why they're doing this and why somebody doesn't go to jail? Can you give us any feedback on that?
Well, I mean, the first person on the top of my list to go to jail, if there was somebody to go to jail, would be Corzine.
Oh yeah, well, that's for sure. Yeah.
And that's not a bank, but I mean, he borrowed a couple $2 billion of other people's money and put it on the line, and if he wins the bet, he becomes a genius, and if he loses, well, it's other people's money, so it doesn't matter. But in the case of the J.P. Morgan, that $13 billion that they're paying in fines, I mean, a lot of that has to do with the Washington Mutual or whatever that company was out in California, that they were basically told by the government, you've got to buy that. So they did the government a favor, and now you see what they're getting. He was good buddies with Obama, and now when there's a banker meeting, he has to sit in the corner by himself when he used to sit right across from Obama. I mean, it's just a joke, but the Fed can do whatever it wants. It has unlimited power, and you can't fight the Fed in the markets, and you can't fight the Fed, if you're a business, because they can put you out of business. Look at Stevie Cohn. Now, I'm not saying he wasn't doing insider trading, but basically they decided to put him out of business, and they put him out of business, and they could do that for a bank. So basically the banks have to say, well, let's cut a deal, and we'll write you a check.
Well, I guess it is different this time. Then the question that I have is, if this works so well, why didn't they do it during the first 45 years we knew each other? When we had recessions, back in 1970 and 74 and 82 and 87 and 91. I mean, we used to have recessions, but we haven't had a recession. Well, we did have one in 07, 08, but that was a financial meltdown. But I guess they just figured it out that they could do whatever they want,
Right. It's regulators out of control. It's this new administration that we've had now for going on 5 years. It's regulations out of control, and that's how they're controlling the economy. And there's nobody that can stop them because they're executive orders. So it's not approved by the Congress or the Senate.
Okay,
that's
Rich,
how we get away with it.
I had a question. One of our listeners wants to know: does corn have a chance to ever rally again?
Well, the best fix for oversupply is low prices, and we're seeing low prices now. Now, the way it works, if I'm a farmer, I'm done harvesting. I've either put it in the bin or I've taken it to the elevator. If I took it to the elevator and I don't sell it to them that day, I can get delayed pricing. They'll give me 10 days to make a decision. After that 10 days, if I want to not price it, I've got to pay storage. Now they've actually moved that grain, but that's just how the thing works. And so they'll charge me storage for 3 months, and that might be 10 or 12 cents a bushel. So most of the stuff's locked up, and it's after the first of the year. They don't want any more. Farmers don't want any more income this year because they don't want to pay any taxes, so they won't sell anything really until after the first of the year. But we've got to work through the supply. That you saw last week, the market sold off that one day when they changed the EPA percentages that were mandated by law for ethanol. But right now, ethanol is very profitable to produce. I mean, some of these ethanol plants are producing ethanol and they've got a $2 a bushel margin. Well, if I can make $2 a bushel, I don't care what the EPA thing is. I'll make $2 a bushel. And what happens is when they don't have any profitability, then they'll stop using the corn. But we think that the only market where there's a real tightness is the soybeans. But the corn's at best in the trading range until we have some kind of, a 40, 50 cent trading range until we have some kind of a weather problem. And so we're talking March, April, May of next year, or maybe January if a minor weather problem. They don't grow that much corn in South America, but if there was a weather problem in South America, you might get some weather-related bumps, but it's not, a 10% rally is what you're probably limited to until we get some significant weather problem in this country, and that's March, April, May, June. It's a long time away. Now, I think I read in one of your letters about the solar flares that we're seeing in November here.
Yeah, but they didn't turn out. They were about 1/5 the size that they were expecting, so that really didn't turn out to be much at all.
Well, it all depends on how big they are, number one, and where the alignment of the Earth is versus the sun at that time. But there's certain things that affect the weather and that we just don't understand. And we're totally clueless on.
Hey, Rich, I have a question for you. For 2014, what do you think would be the best commodity trade for 2014?
I think I would have to go. I think I'd have to go with the metals. If we keep the printing presses going around the world, eventually they're going to light a fire on it. Right now, what's happening is money is sucking out of the commodity markets and going to other places. At some point, some of that money is going to start flowing back into the commodities, and the things that we'll see most undervalued, I think, are the gold and silver. By the way, I keep an eye on copper because it has a PhD in economics, and if you look at it over the last 2 weeks, it's actually making a bottom formation, and if it can get just a little bit higher, it's going to start a decent advance. The energies I completely rule out because we have fracking in this country, particularly up in North Dakota, and now it's down in the Permian Basin of Texas, but it's now we're starting to frack all over the world. We're starting to frack in Europe, in China, in Russia, and this is a technological shift that's going to allow for an overabundance of energy prices, which will make unusually low energy prices for the next probably 3 to 5 years minimum, if not more. So I can't get excited about the energies. I really have limited knowledge on the softs, cocoa, cotton, so I don't even think about those. I know this, that if we were getting as much demand from China for any of the grains as we get for cotton, the grain prices would be going nuts because, they are just using cotton like crazy. I'd have to go with the metals. I'd have to go with gold or silver or platinum.
Yeah, we're having a little $3 a barrel rally in crude oil today, but I guess that's just short covering because it's been down for so long.
When you're looking at it from a big macro picture, what you look at are the spread relationships. And when the front month is a premium, there's demand and there's a shortage. You look at the soybean market, you see that. 6 months ago, you looked at the energy markets, crude oil as an example, and you saw that. But when that contango, goes away, when that premium goes away from that front month, that's telling you got more than enough, and it's a long while before you're going to have a good market. And when there's a technological change like there is in energies, it's years, not months.
Mm-hmm. That's for sure. We don't look like that's coming anyway. Hey, listen, Rich, I wanted to thank you for coming on. We'll have you on in a couple of weeks, okay?
Okay, sorry I didn't hook up with your guy yesterday. We'll talk about that later.
Okay, listen, and have a happy holidays, and I'll tell Mark and Paula you said hi.
You bet. Take care. Thanks.
Okay. Okay, folks, we got the Dow Jones still quite strong on the day, up about 75. The NASDAQ is still strong. The S&P is still up about 10. So things are moving for the bulls. They're looking in control. Everything looks good in Camelot. So everything seems to be okay. The U.S. dollar is holding its own against the euro, of course, but it's back up to where it was with the British pound. The Japanese yen has had a big move to the upside because the Nikkei was up about 2% yesterday in Japan, so that made a move to that level. One of the things that we're going to do when we come back from the break here, at the end of this, I'm going to take a long look at gold because Rick LaRusso, who I have the greatest respect for, also a friend of Rich, is looking for a cycle bottom coming in here this week, and we just hit the 786, so we need to look at gold and silver and copper when we come back, from the break that we're looking at. We've already taken a look at the gold, but we want, and also the silver, but we need to re-examine copper because I know it just finished a small Gartley pattern down at the 13 level, and it's already rallied up to the 19-cent level. So this might be a place where we might start looking to be a buyer of gold and silver if it can hold this 786 level. 877-927-6648.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and I'm going to end the show here with the with this gold market because I put up the GLD, which is the ETF for gold, and we have just hit a perfect 786 retracement that we talked about earlier in the show. And as long as this holds, we've got a real chance because, silver has gone down and almost made a double bottom from the June lows, whereas we've held the 786 in the gold here, and we've come down very orderly and have made several nice little waves down. So there's a real shot here that if gold can hold the 1235 per ounce level, that we're going to have a pretty good rally from here. But boy, it really has to hold 1235. Now we're only talking about, $10 an ounce, so it's not a lot of leeway there, but it's still strong enough that it should be able to hold it. Now the last one I wanted to put up, or one of the last ones, is the copper market, because we've completed a Gartley down here at $3.13 a pound. We rallied already 6 cents a pound. Just in a matter of a day and a half. So that tells us that this Gartley is in vogue, and if it's correct, we could get a rally in copper, all the way up to 350, and maybe that's when all the people that are holding all this cash on hand in the markets will start to say, well, we better start buying some commodities because they're cheap now, and maybe we'll make some products and sell them to the folks, and we will live on forever in Camelot. And it is different this time, and we will be able to, everybody will be able to buy anything, and it'll go up in price, and everybody will be happy, and there'll be no one sad in the world. And wouldn't that be a wonderful thing? So whether that happens or not, who knows? It happened once in Camelot, and it could happen again one other time. I think it happened also to Goldilocks and the Three Bears, as I recall. But that ended rather badly, as I recall from the nursery rhyme. So we'll have to just to see what's going to occur from that point. I will have to say that my view has not changed, folks. This market has some really serious problems, in my opinion. And remember, my opinion is like everything else. Everybody has one, and sometimes it's not always of the most odoriferous kind. But we've had this tremendous expanding triangle pattern at the same time that we're having high PEs, high margin debt, and bullish consensus like 1929, and also like we had in 2000. So this is going to be very interesting, and we've got this big cycle date, at least for me, coming in tomorrow, and also it'll go through Friday, and then the real ramification will probably come in on Monday. Would be if it's good, we'll see it, and maybe the market explodes to the upside, and the cycle bottom came in from a very, very high level. I've never seen that happen before, but like we say, we live in different times here, and maybe it is different this time, and that's what's going. If that's what's going to happen, well, whether it's going to be that way or not, I'm not absolutely sure, but you have to be aware of it. These markets can go a lot farther in one direction than you think, even though we've been going up rather gradually in some of these. And the New York Stock Exchange Index, folks, is not acting very bullish at all. We're just making lower highs on the New York Stock Exchange, the NYSE. We're not anywhere near the highs. We're just making 61% retracements with a 135 pattern with lower tops from October 29th. So that's another indication that maybe the market's not nearly as bullish, as it appears. But that doesn't mean it can't change. Live every day in an attitude of gratitude, and may God bless.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.